Hello students, welcome to all of you Shiksha 360, and today basically we will start our chapter number 12, that is banker customer relationship. Clear? So I request to all of you basically students who have not subscribed our YouTube channel, please subscribe our YouTube channel, and for all updates please join our Telegram group, and if you join in specific course you can join for PPB, accounts and legal. So let's start our discussion. Banker customer relationship part 1. Clear? So in this session basically we have to discuss regarding the AML, that is anti-money laundering, and KYC. Clear? So let's start. So anti-money laundering. Clear? So what is that? Clear? So money laundering. What is the money laundering? There are 2 to 3 terms. Basically, one is money laundering and one is black money. Clear? So basically, we have to understand regarding all these things. Clear? So what is money laundering? Basically, money laundering, basically it is a process. Clear? Money laundering, basically it is a process whereby the origin of funds generated by illegal means is concealed. Clear? That is basically stopped. So basically money laundering, basically it is a process basically whereby the origin of funds generated by illegal means is concealed. Example like drug trafficking, gun smuggling, corruption, etc. Clear? Corruption, etc. Clear? And black money, we can say that basically on which tax is not paid. That is taxable, but we are basically making in that way basically that it is not comes, or basically taxable is not. Clear? So money laundering, basically it is defined under which section? Basically money laundering, basically it is defined in section 3 of the Prevention of Money Laundering Act 2002. Clear? So basically it is defined under section 3 of Pmla Act 2002. And this is very, very important for the examination point of view. Clear? 0.5 mark question. Clear? So money laundering, basically it is a process basically whereby the origin of funds generated by illegal means is concealed. And money laundering, basically it is defined in section 3 of the Prevention of Money Laundering Act 2002. And basically punishment basically would be rigorous imprisonment, that is basically jail, for not less than 3 years. That is minimum basically it is to be 3 years, but up to 7 years. Clear? But basically but up to 7 years. And fine as per the gravity of the offense. Clear? Basically as per the gravity of the offense. Clear? If offense is basically big, there is more fine, and if offense is not up to that much, so basically and basically fine basically it is depends upon the gravity of the offense. Clear? Gravity of the offense. Clear? So please remember all this thing. That is basically it is defined under section 3 of the Prevention of Money Laundering, and in that minimum imprisonment time basically it is 3 years and maximum basically but up to 7 years. Clear? Basically but up to 7 years. Now move to the next one. What are the stages of the money laundering? Clear? Basically what are the stages of the money laundering? This is the most important question. Clear? In the examination, basically how they will ask the stages. Clear? Basically they will say that basically there are 3 stages of the money laundering. Please arrange them in the sequence. That is basically under first is which, second is which, third is which. Clear? So basically like they have given 1, 2, 3 placement, layering and integration. Clear? Basically these are the 3 stages of the money laundering. Clear? So how they will ask? Clear? Like under the option number 1, that is this is A, this is B, this is C. Clear? So basically in the option number 1 they are asking sequence A, C, B. In the option number 2, B, C, A. In the option number 3 is A, B, C. Clear? So in this way basically they will ask this question. Either it is 2.5 or 1 mark question. Clear? Depends upon the paper. But this type of question basically you will find in the examination. Clear? Very, very important. Clear? So how you can remember this one? Clear? Stages of money laundering. Clear? Just you know that basically if your bank profit is more, so basically what you will get basically at the year end, that financial year end, that is PLI. Clear? That is PLI. Clear? That is profit linked incentive. Clear? Basically at the end of the year. Clear? Basically in the month of basically when your financial institution or basically when your bank results declared. Clear? Or when your bank declared the result, so basically on the basis of the net profit basically you will get the profit linked incentive. Clear? Just remember that profit linked incentive, that is placement, P for placement, L for layering, I for integration. Clear? So this is the sequence for that. Clear? Placement, layering and integration. Clear? So please remember this is very, very important. Clear? Placement, layering and integration. Clear? So now let's discuss one by one regarding all these terms. Clear? What is the meaning of the placement? So it refers to the physical disposal of proceeds of criminal activity. Clear? So what is the meaning of the placement? Basically it refers to the physical disposal of proceeds of criminal activity. Clear? Basically it refers to the physical disposal of proceeds of criminal activity. Clear? Next one is the layering. Clear? That is basically if you are getting funds at one place. Clear? So basically divide it into further parts, clear, so that basically it is very difficult to traceable, clear. So the launderer, layering, basically under that basically what will happen, the launderer engages in a series of conversions, clear. Basically under that basically the launderer engages in a series of conversions or movement of the funds to distance them basically from their source, clear. Basically under the layering, basically what will happen, the launderer basically engages in a series of conversion or movement of the funds, clear. The launderer basically engages in a series of conversion or movements of the funds to distance them basically from their source, clear. Basically to distance them from their source, clear. That is basically they are earning money or getting money from this thing. So basically they are basically utilizing money in different sources, clear, or in different places, so that it is difficult to trace it. Next one, integration, clear. Basically integration, basically this is the final stage in the process, clear? This is the final stage in the process. Basically here the launderer basically makes it appear to have been legally earned, clear. Basically in the integration stage, clear, the illegal money basically it is converted into the legally earned money and accomplishes basically integration of the cleaned money into the economy, clear. And that money basically they have put into the economy, clear. And that money basically they have to put into the economy, clear. So these are the three stages, that is placement, layering, and integration, clear. So now let's discuss one by one regarding all these things, clear. Money laundering stages. First one is the placement, layering, and third one is the integration, clear. So accumulation the money basically from the illegal activities, clear. That is the placement. Now basically they have do the placement, clear. First of all, first one basically they have accumulating the money, clear. So they have to place that money, that is placing the money into financial system, clear. That is basically through the bank. And okay, next is that is layering, that is basically transferring the money basically to hide the origin of the funds, clear. Basically transferring the money basically to hide the origin of the funds, clear. Like we can say that basically if the money is deposited in the account, so basically they have to be taken out by the cash, clear, from the account, clear. So that basically it is very difficult to trace basically where the money goes, clear. Basically where the money goes. So transferring the money basically to hide the origin of the funds, clear. Next one is the integration, clear. Integration, that is basically returning the money basically for the money launderer to spend, clear. Returning the money basically for the money launderer to spend, clear. Because now they have the illegally earned money basically converted into the legally earned money, clear. Basically in that phase the illegally earned money basically it is converted into the legally earned money, clear. So these are the different stages, clear, or these are the different phases under that, clear. That is under the money laundering stages, clear. Now move to the next one. What are the objectives of prevention of money laundering, clear. We know that basically what is money laundering, and it is mentioned under the section 3 of the prevention of money laundering 2002, clear. So now basically we have to discuss regarding the objectives of the prevention of money laundering, clear. Now we have to discuss the objectives of the prevention of money laundering. First one is to prevent the criminal elements, clear, basically from using the banking system for money laundering activities, clear. First point here basically that is basically to prevent the criminal elements from using the banking system for money laundering activities, clear. Basically for what? Basically for money laundering activities, clear. We have to prevent, clear, basically from the criminal elements, clear, to use the banking system. Second one is to enable the bank, clear, to enable the banks to know or understand the customers and their financial dealings better. This in turn basically would help the bank to manage the risk prudently, clear. To enable the bank basically to know and understand the customer, clear. Basically we have to take the proper identification of the customer also, clear, and their financial dealings better, clear. Basically this in turn basically would help the bank to manage risk prudently, clear. Third one is to put in place, clear, to put in place basically an appropriate controls, clear. To put in place appropriate controls basically for the detection and reporting of suspicious activities, clear. To put in place basically appropriate controls for detection and reporting of suspicious activities, clear, and reporting of suspicious activities in accordance with the applicable laws or let down procedures, clear. To put in place appropriate controls, clear. Basically to put in place appropriate controls basically for the detection and reporting of suspicious activities in accordance basically with the applicable laws or let down procedures, clear. Laws or let down procedures. Okay, to put in place basically we have to follow or make appropriate controls, clear, for the detection and reporting of suspicious activities. Next one is to comply with the applicable laws and regulatory guidelines, clear, as to be updated by the like Reserve Bank of India or the Government of India or any other agency, clear, that is to be formulated by the government basically for that specific purpose. Next, last one, that is basically to take necessary steps to ensure that the concerned staffs are adequately trained basically in the know your client and anti-money laundering procedures. Clear, to basically to take necessary steps to ensure that the concerned staffs are adequately trained basically in the know your client and anti-money laundering procedures. Clear, and anti-money laundering procedures. Okay, so please remember all these points. Clear, please remember all these points. These are the basic points. Just you have to remember that. Now move to the next one. Money laundering risk perception. So money laundering basically activities expose the bank to various risks. Clear. So basically what type of risk basically the bank will face. Clear, basically under the money laundering. So basically money laundering activities basically expose the bank to various risks such as the operational risk, reputation risk, compliance risk, legal risk. Clear, compliance risk, legal risk. Clear. So basically these are some of the risks. Clear. So money laundering basically risk perception. So money laundering activities basically expose the bank to various risks such as the operational risk, reputational risk, compliance risk, and legal risk. Clear. And further, basically Reserve Bank of India basically has issued KYC guidelines which we have to follow. Clear, basically which we have to follow. Clear. Every year basically Reserve Bank is also published. Clear, basically which bank has more frauds. Clear, basically which bank has less frauds. Clear. So basically we have to basically public will take care regarding all these things. Clear, basically while using the banking services. Clear, basically in these specific banks. Clear, that is basically in this bank basically there is more fraud. Clear. So basically we have to make our dealings in such a way. Clear. So basically all these things basically they have to take care. That's why basically RBI published the guidelines. Clear, with the passage of time to time. So very, very important for the examination point of view. Clear. So obligations. The previously basically we have discussed the objectives. Now basically we have to discuss the obligations under Pmla Act 2002. Clear, that is section 12 of the Pmla 2002. Clear. So obligations basically under Prevention of Money Laundering Act 2002, that is section 12 of the Pmla. First one is the cash transaction report. Clear, CTR. Cash transaction report, that is CTR. Clear. So all cash transactions of the value of more than rupees 10 lakh or its equivalent basically in the foreign currency. Clear. Cash transaction report basically all cash transactions of the value of rupees more than rupees 10 lakh or its equivalent basically in the foreign currency. Clear, or its equivalent basically in the foreign currency. Second one is basically all series of cash transactions. Clear, all series of cash transactions basically integrally connected to each other. Clear, basically integrally connected to each other. Clear, that is basically they're continuously getting that doing the transaction of 99,000 or we can say that 49,000. Clear, so that is the thing basically they are saying that. Clear. So all series of cash transactions. Clear, basically all series of cash transactions integrally basically connected to each other which have been valued basically below 10 lakh or its equivalent in foreign currency. Basically where such series of transactions have been taken place within a month. Clear, and basically all these transactions basically like basically we can say that of 99,000 or 49,000. Clear, but these transactions are in large number. Clear, and that are amounting basically to exceeds 10 lakh. Clear, within a month, and the aggregate value of such a transaction basically exceeds rupees 10 lakh. Clear, and the aggregate value of such a transaction basically exceeds rupees 10 lakh. Clear, that is basically we have to report also. Clear, that is basically we have to report also. Clear. So either the transaction of 10 lakh or more or basically cash transactions. Clear, that is basically integrally connected to each other which have been valued. That is basically each transaction it is basically less than 10 lakh but aggregate basically it becomes 10 lakh. Clear, basically but aggregate basically it becomes a 10 lakh. Or all cash transactions basically where forged or counterfeit currency notes or banknotes have been used as genuine. Clear, basically all cash transactions. Clear, basically all cash transactions basically where forged or counterfeit currency notes or banknotes basically have been used as genuine and where any forgery of a valuable security has taken place. Clear, and where any forgery basically we can say that basically we will make it as a duplicate. Clear, basically of the original basically we will make as a duplicate. Like basically we can say that we have a fixed deposit. Clear, so basically we will make same fixed deposit. Okay, that is the thing basically they are saying. Okay, so all cash transactions basically where forged or counterfeit notes or bank notes have been used as genuine, and where any forgery of valuable security has taken place. Clear? And where any forgery of a valuable security basically has taken place. So, however, individual transaction basically for below rupees 50,000 are not to be included under the CTR. Clear? That is cash transaction report. Clear? However, individual transaction basically for below rupees 50,000 basically are not to be included under that. Clear? Are not to be included basically under the CTR. That is cash transaction report. Clear? That is cash transaction report CTR. So next one, basically when we have to report. So cash transaction report basically for each month basically should be submitted to FIU IND basically by 15th of the month. Clear? Like basically we can say that basically of the September. We have to submit by 18th, 15th of October. And of August, basically we have to submit by 15th of September. Okay. So cash transaction report basically for each month should be submitted to FIU basically IND by 15th of the month. Clear? Basically by 15th of the month. Next one is the suspicious transaction report. Clear? Suspicious transaction report. Clear? Suspicious transaction report should be furnished basically within 7 days of arriving at a conclusion that any transaction basically whether it is of cash or non-cash. Clear? Suspicious transaction report basically should be furnished basically within 7 days of arriving at a conclusion that any transaction basically whether cash or non-cash. Clear? Basically whether cash or non-cash. Clear? So please remember all these things. Now move to the next one. These are the two questions. Clear? So as per the PMLA, the banks are required basically to maintain the record of transaction basically for a period of how much time? Clear? Basically for a period of how much time? From the date of cessation of the transaction. Clear? That is basically they have to maintain basically record for how much time. Clear? So I request to all of you, please answer all these things basically in the comment section. 2 years, 5 years, 10 years, 20 years. Clear? Next question. As per the PMLA, the banks are required to basically submit to Financial Intelligence Unit, that is FIU, India, statement basically on the suspicious transaction basically called as STR. Clear? That is this one. This is to be submitted basically within 7 days. It is to be submitted basically for transaction of how many amount? Clear? That is 10 lakh, above 10 lakh, below 10 lakh, above 10 lakh. Clear? So basically it is above 10 lakh. Clear? It is above 10 lakh. And within dash time, basically within 7 days of the close of the month. Clear? Basically within 7 days of the close of the month, like basically of the August, basically we have to submit till 7th of September. Clear? So please remember all these things. Clear? So please remember all these things. And for question number 1, I request to all of you, please answer. Clear? What is the correct answer of this question? Clear? Now move to the next one. That is what is KYC. Clear? Now move to the next one basically which we have to discuss it, that what is KYC and why it is it required. Clear? Basically why it is required. Clear? So what is KYC? KYC basically means that know your customer. Clear? KYC basically means that know your customer. And basically it is a process. Clear? Basically KYC basically it is a process by which the banks obtain information. Clear? Basically it is a process basically by which the banks obtain information basically about the identity and address of the customers. Clear? Basically it is a process by which the banks obtain information about the identity and the address of the customer. Clear? So basically it is a process basically by which, like basically if any customer basically visits a branch for opening the account. Clear? So first of all they will check the Aadhaar card and PAN card of that specific customer. Clear? So basically it is a process basically by which the banks obtain information basically about the identity and address of the customers. And this process basically helps to ensure that the bank services are not misused. Clear? This process basically helps us to ensure that is basically there is not any fraudulent person basically doing the transaction on the behalf of any other. Clear? So basically whenever any customer basically visits a branch basically for the account opening, first of all basically you have to do the eKYC. That is Aadhaar authentication. Clear? Very, very important. Clear? Basically very, very important. Clear? Basically for opening the account, that is basically this account is basically belong from that or not. Clear? Basically presently basically there is a feature basically in the Aadhaar that is basically every person basically mobile number basically it is linked with the Aadhaar. Clear? So basically you have to do the KYC. Clear? Either through the mobile OTP or basically through the biometric. Clear? It depends upon you basically which technique basically you have to use, but definitely basically it is very, very important for verifying the customer. Clear? Basically, whether that person it is the same person or any other person. Clear? Third one is basically the KYC procedure basically is to be completed by the banks basically while opening the accounts. Clear? That is basically which I have already explained. Clear? Further, basically banks are also required to periodically update their customers' KYC details. Clear? Like with the passage of time. Clear? Sometimes basically there is a change in the address rate. Clear? Basically earlier basically one person is student, now later on basically that person is engaged in the job. Clear? So basically we have to change the category of the person also in the our details. So that is beneficial for the bank also, and that is also the updated detail clear of the customer. Clear? Sometimes basically the person basically present earlier basically the person is living in the Delhi. Now that person basically shifted to the Jaipur. Clear? So basically we have to change the detail also. Like basically person visits a branch basically for the checkbook apply. And the person now residing in the Jaipur. Clear? And person checkbook basically will reach in the Delhi account. Clear? So basically it will create a problem. Clear? So that's why basically there is a requirement basically for the periodically update their customers, and also for the prevention purpose. Clear? And also for the prevention purpose. Clear? Now move to the last. What is KYC? Clear? What is KYC? Clear? So here basically we are discussing basically why it is required. Clear? Now basically we have to discuss basically what is KYC. Clear? So a person or an entity. Clear? What is KYC? Basically a person or an entity that maintains an account and or has a business relationship with the bank. Clear? So basically know your customer. Basically we have to know regarding that customer. Clear? Basically to whom basically we have to know, that is basically either it is a person or any entity. Clear? That is any firm. Clear? Basically that maintains an account and has a business relationship basically with the bank. Clear? And has a business relationship basically with the bank. Next one. One on whose behalf the account is maintained. Clear? Basically one on whose behalf the account is maintained, that is the beneficial owner. Clear? One on whose behalf the account is maintained, basically that is the beneficial owner. Third one is basically beneficiary of transactions conducted by the professional intermediaries. Clear? Basically beneficiary of transactions conducted by the professional intermediaries such as stockbrokers, chartered accountants, solicitors, etc. Clear? As permitted under the law, and any person basically or entity connected with the financial transaction. Clear? Beneficiary of transactions conducted by the professional intermediaries such as stockbrokers, chartered accountants, solicitors, etc. as permitted under the law, and any other person or entity. Clear? Basically and any other person or entity basically that connected with the financial transaction. Clear? Basically connected with the financial transaction. Clear? So basically we have to take care regarding all these things. Clear? We have to take care basically regarding all these things, and please remember all these things properly. Okay? So that is basically that is KYC. Why is it required? And know your customer. Clear? So in the next session basically we have to discuss the key elements of the KYC policy. Clear? This is very very important. There are basically these are the key elements. First one is basically customer acceptance policy, CAP, CIP, that is customer identification process, monitoring of transactions, and risk management. Clear? Monitoring of transaction and risk management. Clear? In the next session basically we have to discuss in detail regarding all these terms along with some other concepts. Clear? So thanks to all of you basically for joining this session. Hope all of you are able to understand basically what we have discussed in our today's session, and that is very very important for the examination point of view. Clear? Definitely basically what we have discussed today. Clear? You will get basically 1 or 2 questions basically in your examination. Clear? At least basically we can say that 1 or 1.5 marks out of the 100 basically we have covered in this specific session. So I request all of you, please do watch the sessions continuously and join the live sessions. Clear? That is basically link is basically presently in your PPB group. Clear? So thanks to all of you basically for joining this session.